Hey everybody, not as bad as yesterday. Bumpy night, but we're still here, we're still alive and kicking, and this is brought to you by caffeinated beverages, all kinds, our sponsor today and every day. So I'm going to talk about a couple of things today. I'm going to talk about why I believe, make sure, yes, I think testing, yep, audio works good. Why I believe, why the title is called Disruption. Because yes, the idea today is to prove disruption is here to stay, and disruption takes the form of crypto and disruptive stocks, and why you need to be part of both for the future. So we're going to cover a lot of ground, and of course, MMF and edutainment. So thanks for all for being here. Happy, I don't even know what day it is, Monday. Yeah, tomorrow's TA Tuesday. Octa Tuesday, I should say, on China Technical Analysis. But before I jump in, I've noticed this over the past couple of weeks, but it's accelerating. And emotions are running very high when markets are extremes, both tops and bottoms. And upside and downside, the winners get excited at the top, and those who have been losing get excited when they see their competitors stumble. So listen, the truth is somewhere, of course, in between, but it's important to remain very calm and very patient in these markets. And also, we're all in this together, okay? It's a zero-sum game. Let's just help each other out and not just be so full of venom out there. So that's why we do this. Now, the good news is crypto is here to stay and it's not dead. So we're all in this together. No matter which horse you back, as Raoul Pal says, you're going to do well. So just this is the worst time to throw in the towel. So that's the big message behind the story. I'm not slinging hopium, but I am saying what I see. And I can also talk about what it is. So yesterday we did talk about the Great Cloud on Wednesday, the FOMC meeting. And I'm going to talk a bit about why it may not be as bad from some more data points today, and also why it might be very heavily priced in, especially for some of the action we saw. Now, big news today was this. This was a 14% pump, whatever you want to call it, in 7 hours with Bitcoin. It's up $5,000 from 33. And also, as you see from this chart, we had a double bottom at 33. And you know, I like double and triple bottoms, but this was a beautiful double bottom. And you could see very clearly from on-chain data and others that big money is coming in. Big buyers are still buying. I know you're sick of hearing that, but it's true. Retail is selling, and cascading liquidations are putting a lot of coin on the market, and they're being gobbled up. And that's just a fact of life. There was one wallet that was buying between $2 and $8 million every hour, pretty much, for the last 2 days. So think about that. They're accumulating hard. Everybody knows this is the time to buy. This is unseasonable, low levels. Anyway, let's talk about this. This is kind of funny. Forbes wrote an article. It was one of their technically correct articles, so big woohoo to Forbes. They said Bitcoin prices bounce back after falling to a 6-month low. Very true. And they spoke about the world's most valuable digital currency by market value, rose to 37,500, which is what it hit today, after falling to 32,985 or something. It was just dipped slightly under 33K twice, and it was bought up. Now, they also said we are down 54%. They said 50%, but it's actually 54% from the all-time high of November of 69,000, 68.8 by my records. And it is the lowest level since July 3rd. So again, a lot of stuff. Remember, July 3rd sounds like it's about 10 years ago, but it's not that long ago, everybody. So first of all, the big thing we need to consider is this a head fake or a legitimate bounce? Now, a head fake is a feint when you pretend to go one way and it actually goes the other to fool people, to deceive opponents. We don't know if we have a bottom here, but there's still a lot of negative sentiment out there. There's a lot of people that, were promising $100,000 Bitcoin a couple of weeks ago. Now they're saying it's a $20,000 Bitcoin. It's just all over the place. So you don't know what's going on. But I do think the very positive sign we saw today was high. And we'll talk more about that too. So before we go, we're going to go talk about the elephant in the room, which is Wednesday's FOMC meeting. And this is from a guy called Preston Pysh. It's a beautiful work of art, but it might give some people a headache. So what this really does is it talks about an inverted yield curve. And to step out for a second to explain what an inverted yield curve, and then I'll walk you through the actual chart. But it's basically, it reflects a scenario where short-term debt instruments have higher yields or interest rates than long-term instruments. And this is typically a bad sign, because if you take your banks, for example, they typically borrow short-term money and lend it out long-term. So they borrow money at 1% and lend it out at 5%, and that's where they make the margin. But if the short-term borrowing rate is higher than the long-term rate, they won't lend out money. And that can bring about a recession, as well as many other factors. But that's a simple way to think about it. So it's very important that we don't get this inversion where short-term rates are higher than long-term rates, because it can trigger a recession. So there is a method to my madness why I'm talking about this. Well, what Preston Pysh did was he mapped out all of the different yields, 1 year, 2 year, 5 year, 10 year, 20 year, 30 year, etc., and mapped them out with trajectories. And they all seem to be confluent at a point around June 2023. That's when potentially the long-term yields could be under the short-term yields, and that is not good. Now, the reason I'm telling you this story is because if this is the case, and this does happen, the Fed, by jacking rates too fast, could shoot themselves in the foot, and this would bring about a recession. And this is not what he wants to do. So I think the Fed isn't going to tighten very much because of this exact reason. They've got to be very, very careful to walk in a very fine line. And of course, over the last 40 years, we've seen interest rates go lower and lower and lower over time. So it's very difficult to play in this game when the curve is so tight. So we'll watch this carefully. Now, in terms of crypto news, this is from Bloomberg, and a big thank you to Sanjay for sending it to me. It's from Jane Street Capital, and they say crypto trading business is clear growth area. Inquiries from private wealth, sovereign funds, etc. are increasing. Volatile market is attracting attention from Wall Street funds. Yes, you can see that. Wall Street, I know on good authority, Wall Street and hedge funds, etc., are coming in and they're buying stuff. They're buying stuff like MicroStrategy. They're buying GBTC. I think the Rothschilds bought a ton of GBTC today. So they are seeing demand coming from all over the place. Again, sovereign wealth funds, big, Middle Eastern organizations with tons and tons of money, etc., are all looking for direct digital asset exposure. And the volatility is not scaring them away. It's attracting them in. Very important to consider. Now, this is something for those who think Bitcoin is dead and crypto is dead. I've seen a lot of people throw in the towel over the last couple of days, and it's like, no, it's not dead. It's the next big thing. But that article, again, I think it's from Forbes or somewhere, is from 2018 when Bitcoin was under $4,000. Think about that, everybody. 2018 is not too long ago. But let's go a little further. So this is from a guy called Blankfein. He was interviewed on CNBC. And he said, crypto is happening, and I want an oar in that water. He's the former Goldman Sachs CEO, Mr. Blankfein. I love that analogy of having an oar in the water. Now, he did say he can't predict the future. He thinks it's a big thing. He's not able to predict exactly where it's going, when it's going to go there, but he knows it's going to be big in the future. And he's a very skeptical, very prudent guy. But when he says, I'm very skeptical, but I'm also very pragmatic about it. And I just love that expression. I'll repeat it again. I certainly want an oar in that water. This is the old traditional financial institutions all coming in today. Very important. Now, in other dominoes falling news, this is out of the Philippines. The Union Bank of the Philippines has decided to offer crypto trading and custodial services. For those of you who don't know, Philippines is about 110 million people population, and they have quite a bit of money. And Union Bank of the Philippines has at least 6 million customers, most heavily concentrated in the big cities in the Philippines. So, another domino. Remember, if every person in the Philippines that has a bank account here decided to go out tomorrow and buy one Bitcoin, they'd be very, very sad. They're all gone. There's very few left in exchanges. So, that's sad news. Now, in a little bit of Bitcoin dominance news, you can see here we're back to over 42.5%. And that's good. But when Bitcoin dominance goes up, you can see the spike there. It had kind of like a triple bottom back in May, bottom again in September, bottom again in early January. And here we are back up. Boom, boom, boom. So it looks like that 40% is holding for Bitcoin dominance. But that also means a lot of the alts are bleeding and getting hurt right now. So you guys probably see that in your portfolios. But remember, things run in cycles. Sometimes the big mothership goes first and then the rest follow. Now, let's talk about this beautiful piece of work from Glassnode. And this is very, very important. So I like to see patterns in charts and numbers and percentages. And I thought this was super interesting. So it's 2018, 2020, and 2022. For those of you who cannot see the screen, imagine a big chart of historical prices going back 5 years. And it measures, the pink is a measure of the depth of the correction. Now, in December 2018, we dipped 83%. Okay, we're talking about 2018 a lot today. It's kind of surprising. In March 2020, we dipped 74%. And today, or in July, we dipped 54%. And so far, we're at about 54% approximately as well. But it's off that level now. But what you see here, the big thing that I just want to point out is the time series of these big dips happen every 2 years. And the dips are becoming less and less. So 83%, 74%, 54%. The question is, as the asset gets bigger and bigger, the retracements will become less and less. And I have spoken a lot about that. I always said if we do go to 100,000, we'll go back to 50. If we go to 200, we'll go back to 100. The retracements will be 50%. So it looks like that's holding up rather well quiet now. Now, this is from the real Plan C. I love this. Où est le fond? Which is, where is the bottom? And if you look at this carefully, the piece I just want to bring your attention to is, per his chart, which is a combination of on-chain data and technical analysis, he sees the price floor of Bitcoin between $29,977 and $32,681. Now, what I found uncanny about this, good job, the real Plan C, I know you're watching, is the fact that he was $319 off of the bottom today. So we'll see. We'll see if this holds true. Remember, if there is a big black swan event, we can wick down below. But I think stability could definitely be there around that level. Worst case scenario. Again, barring a black swan, very important. We'll talk more about some of those in a minute. Now, follow the money. You guys know it's always very important to follow the money. Here is some good news. Big money flow from last week into names like Bitcoin, Binance, Solana, Polkadot, and Cardano. And we saw a lot of the moves last week. Remember, these are the close of the action for the week last week. It doesn't reflect today. So the inflows were about $14 million. And this is after suffering outflows for the last 5 weeks of about 317 million, which is about 1% of asset under management. Now, Ethereum continues to see outflows. Red flag there. 16 million of outflows last week. And so people are kind of giving up the ghost a little bit on Ethereum. And if you look at, sorry, I have some caffeine. If you look at the other names, you can see we had some big flows into names as, again, Binance 3.3 million, Solana 1.4 million, Polkadot 1.5 million, Cardano 1.5 million, and Ripple. So that was very positive that the big money is still coming in, institutional money. That shows you that because of the weakness, it's the retail that are most probably selling. Now, in other news, to prove that crypto is not going away and it's not dead, NFT sales, despite the downturn, had the largest 30 days in crypto. So the previous high of monthly sales were about 4.5 billion. But so far in January, we've done 8.6 billion in NFT sales. Mind-blowing. So I did do a video on NFTs, I think, on Friday or Sunday, I don't even remember. But it's just because if you do have a loved one in your family who's very artistic, creative, could be a good way to make some money. Anyhow, let's talk about the other elephant in the room, Solana and Congestion. So as you know, there has been a lot of talk about this. Everybody's going mad. And yes, Solana has been very, very weak, but they have deployed a fix, which is now circling. Now, it sounds simple, but effective. And this fix is rolled out to about 15% of the mainnet beta. Remember, Solana's still in beta. And in a statement from Yakovenko this morning, he wrote that the mark has reached a recent average of about 800 transactions per second, down from their typical 3,000 TPS. And for context, just so you guys know out there, Ethereum runs at about 15 TPS. Okay, this chain on a bad day is running at 800, and the fix put in place is designed to stop spamming, which is congesting the chain. So limiting one message per block, which it sounds like such an easy fix. I don't know why I didn't think of it before, but again, it's a good sign. If things are that easy to fix, it means the chain is probably good. So we'll see. We'll see where this goes, but we remain positive. And every chain has a bad day and a bad series of days, and they've been plagued for the last 3 months, so we'll watch it carefully. Now, let's talk about the stock market, switching gears again. If you look at this, from Bloomberg, S&P tumbles Worst ever start through 16 days, and Cathie Wood's ARK ETF stumbles. I'll talk more about that too. And Jim Chanos is worried about retail traders caught in the rout. Yes, we are all worried about them. I've always stressed, always have powder, dry powder, cash on the sidelines. I've been telling you, moved into cash in December. I've been telling you in my 2022 forecast will be a bumpy year. I've been telling you I've been worried about war and valuations and all sorts of stuff. So this is the problem, everybody. You need to always think with a long term and be paranoid. It helps a little bit in this space to be a little bit paranoid. But let's look at one of the names, Microstrategy. The fall was extremely dramatic. I covered this yesterday and covered the accounting stuff with the SEC, etc., etc. But the fall was extremely dramatic. We went down below 330 today. And in full disclosure, I went in very, very hard. I blew a chunk of my 22% cash on getting in here because just mathematically, yes, there's bad news. Yes, Bitcoin is weak. Yes, Bitcoin's going to rebound. But at this stage, when the price was here, Bitcoin was rebounding. This didn't move. And I was like, what's going on? And I checked my arbitration calculator. It was like the intrinsic value of MicroStrategy just from their Bitcoin holdings is 1.3 times the amount of their Bitcoin holdings. So basically it's 30% off MicroStrategy. And that doesn't even take into account the $1.2 billion of value of the company. It was just, no brainer. Anyway, that's MicroStrategy. A chart to prove that as well. This is the 1 year chart of MicroStrategy versus Bitcoin. Bitcoin's up 12% over the last 12 months exactly. And MicroStrategy is down 41%. So the other funny thing as well, the world woke up and MicroStrategy shot up 18% in 3 hours today, right after breaking through that 330 level. That's when the quants and the hedge funds and the people who are out there with the calculator going, something's not right here. This is too cheap. Forget the accounting stuff. It has so much intrinsic value. So this is one of the reasons you always need to have some powder on the side to be able to take advantage. Now let's talk disruption and ARK versus Berkshire Hathaway. A lot of talk now. Poor Cathie Wood is getting so much heat. Her flagship fund, ARKK, their innovation fund, has been absolutely hammered. And they've taken an absolute beating pretty much for the last year and a half. Now, when you compare that fund to a Berkshire Hathaway fund, it looks like it's caught up over that time frame. Again, sometimes you can cherry pick any charts or numbers to fit your narrative, and that's what these guys did here. But I thought it was super interesting to see. It's like, okay, so is ARK dead? Is disruption dead? Or should we just buy value stocks? And the answer is no. So first of all, let's compare the difference between both. Here you can see ARK top holdings versus Berkshire Hathaway. ARK is pink. Nope, we have a problem. Color coding. No, Berkshire Hathaway is the actual green. ARK is pink. Notice as well, nearly half of Berkshire Hathaway's portfolio is Apple, which could be considered kind of disruptive, but the rest of the stuff will be disrupted by crypto. Like Bank of America, American Express. Soon it should be illegal to sell things like Coca-Cola, in my opinion, because it's poison. Kraft Heinz is just junk food that gives kids diabetes and all sorts of terrible things. So I don't know. I just don't agree with some of these brands that these guys own. Phone companies, Verizon, etc. The blockchain phone company technically exists today, and people will need or be able to use wireless networks. Who knows? If Elon Musk pulls off his grand feat of global internet for the world, all those cell companies are dead. Everybody will go directly to his offering. Anyway, we'll talk more about that in the future. But in terms of comparing these names to Tesla, Zoom, Teladoc, Roku, Coinbase, many of them are beaten to death. I own a couple of those names. I'm short a couple of those names. It's just very disruptive. I know where I would want to be. And this is the chart that I want you all to see. If you look at a 5-year horizon, the return for ARK is 223%. The return for Berkshire Hathaway is 85%. So ARK crushes Berkshire Hathaway over that 5-year time horizon. 2.62 times, 2.65 times approximately. So it does do a lot better over the long haul. So remember, disruption, whether it's crypto or disruptive stocks, is where you want to be. And that's the big message for today. And remember, as Cathie Wood says as well, when these names do rebound, they'll go parabolic real fast. The next 3 to 5 years are extremely positive for these names. Now, I don't want to be slinging too much hopium. I want to have a quick reality check with you all. First of all, there are clouds on the horizon and headwinds, and the headwinds are getting more and more scary as we go forward. We have the Ukraine, we have Taiwan, we have inflation, we have the Fed and interest rates, we have tapering, we have supply chain issues, we have trade wars, we've got financial crises in places like Turkey all around the world, and we have global unrest. People are getting frustrated too. So we're seeing everything kind of simmer to a boiling point. So beware of this. And remember, still have that cash on hand, because we don't know what's going to pop, but something's going to definitely pop. But who knows? We might get to that flight of safety narrative for Bitcoin I've been talking about for a long time. Now, 2 things I do want to mention. The China versus Taiwan stuff is heating up right now. This was just a terrifying visual from a real drill for the US. Real life drill. It's a real life simulation of war, saber rattling galore between US and China. China have sent in 39 aircraft to combat the US drill, and that's like multiple aircraft carriers, destroyers, bombers, you name it. It's just a terrible, terrible thing to see, and I hope calmer heads prevail and we don't ever go into anything like this. And the other thing as well is Ukraine. I'm hearing a lot of rumblings. Gas prices in the Ukraine have gone up 7x in the last 24 hours. NATO said on Monday they was putting forces on standby and reinforcing Eastern Europe with more ships and fighter jets, etc., etc. The West is buckling up and expects Russia to attack. It looks like it's supposed to be imminent at this stage, with about 100,000 troops on the border. So fingers crossed this will not happen. But the big question is, why am I showing you a picture of a map? Is the theory is what Russia wants is either full control of the Black Sea, which is the Ukrainian border there, or to control the flat ground, which will prevent any ground-based attack into Russia. They need to build that border either way or have access to both. And that's the prize that Putin wants, especially with all the NATO countries coming up against his border. So that's the news today. Hope you like it. I'm going to take a couple of questions, and then I don't know what I'll do after that. Hopefully find some things that will make us less, bring us away from war. Luke Broyles, previous support levels and bottoms for Bitcoin didn't hold. What makes 30K different? Worried about lack of capitulation, candle volume causing bear trap. Volume is light, but as we've been saying, there are thousands and thousands and thousands of investors and fund managers and hedge funds, etc., that have been looking at this space for the longest time. And they know that this is a finite asset. They know it'll be a flight to safety. They need somewhere to park their money that's safe. Fiat debases. Gold doesn't go anywhere. Stock market's too shaky. Where are they going to park it? Like I started this presentation off showing why everybody's looking at it. You know, the Goldman guy and a whole bunch of others. It's just, as I've always said for years now, for years I can say that honestly, all roads lead to Bitcoin. And I think that's what's happening. You're right. There has been a lack of capitulation. We haven't seen everything crash down. It's been like a 2,000 a day for days and days. But what we saw today was kind of interesting. Big volume came in, big buyers came in, big blocks. But you could tell as well from looking at the on-chain data and the wallet purchases, these are people buying $2 to $8 million a pop. They were not retail investors, but they were grabbing what they could. And they were waiting. They're waiting in the wings. And these guys are professional and they're extremely patient, like we try to be. And they were waiting for this, once in a year opportunity to buy. And they believe it could be. Or maybe they were just nibbling and getting a position because they never had any. And they watched it go to 68, 69K and they said, okay, it's too expensive now. I'm going to wait. Now it's more than half off. Then they come in. So I think that's what's happening. And the reason you don't see a lot of the volume is a lot of the action is happening OTC as well. So that's my answer to that. Roy Stephen, is this current inflation due to supply shock, debasement Fed, or a combination of both? If both, what ratio would you give it? This one's going to make me think hard. So I don't think the supply chain is a big problem. I think mathematically, and I've proven this 7 different ways to Sunday, if you dump a huge amount of money supply like M2, you increase it radically, it trickles down over the next 2.5 years. So you think of a desert island with 10 people, each one has $1 each, and there's 10 apples for sale. Each apple will go for $1, hypothetically. You increase the number of dollars per person to $2 each, price of apples will go to $2. So the goods are finite, and they're becoming even more finite because of the supply chain thesis you called out. But the money is what drives it. Money drives everything. So I'd say it's 80 to 90% driven by the actual money supply. Great question. ARKK 007. How could ETH be a store of value if they couldn't make more? Seems shady. Wouldn't Bitcoin Cash be a better store of value after Bitcoin? Not chilling, BCH I square. Well, never buy a cheap imitation of the original. Rule number 1 in investing. So I'm not even going to talk about BCH, but the store of value whole idea, yes, it will be deflationary, but technically Ethereum can still increase supply over time. They just need to vote on it. So it is deflationary now, but technically it doesn't have a max cap, unlike other names. So from that perspective, it could, but that's not the real meaning of a store of value. The Ethereum itself is not really divisible like Bitcoin is to Satoshis, but at the same time, it can be used for transactions, to buy stuff, to trade, to exchange. Especially if you want to do anything on the chain, you need a lot of Ethereum to use for gas fees. So from that perspective, it technically already is, but I think the pristine store of value will always be Bitcoin as far as I'm concerned. That could change in 5 or 10 years if there's a new version, but of a replacement, but Bitcoin Cash is not that by no stretch. So I hope that helps. Viking Beard brand. I've got a big, strong Viking beard. What are your thoughts on Pulse Chain? I had a look at that a while back, and I did not, as usual, I'm very picky. Let me see if I can dig up my notes here. I'm not prepared. Yeah, I covered this the other day. I remember because the notes are right there. You know, it doesn't have data on it. It doesn't have any market data. It's been watched by a lot. Not something. When there's no data, I can't make a decision, and when it's not an established brand, I can't make a decision. So there's nothing that I can be said good or bad about it. But again, if there's no data, I would never invest. So hope that helps. Bug Duck Kiwi. How do you know when to run into burning building? Well, today I did. Ran in hard. So all my life, I've just waited. So I set theoretical targets, and I have kind of layer in prices, and I have go big or go home prices. And we hit that today on MicroStrategy. It's just like I did the same thing back in October, November 2020. Before anybody even knew what MicroStrategy was. I just saw the opportunity. I said, the math just doesn't add up. And I just look at math. I don't invest in any emotion or people. I just look at numbers. And when I saw the arbitrage potential, which were way under, but I saw it going to such a level, and I also got wind from people on Wall Street and other places that they were buying a lot. It was just a no-brainer. So I've done that with most things in my life, and that's when you get the most reward as well. It's very risky, and I also was balancing very hard in my head today. Is okay, the world could be on the verge of a war, World War III or something, but that didn't dissuade me because I did buy positions out to 2024. It was a massive synthetic long on MicroStrategy, my biggest ever by a long shot. And I just thought, we'll see. But I was very surprised to see the price go up so much today as well. Like that huge gain. Actually, on my synthetic long, it made more than 35% in 3 hours. So it's a huge position, but it's already paying off. But fingers crossed, it could fall down again. MicroStrategy could go back to 300, 320. Who knows? But I'm ready for that. And if it does, I'll probably take a second bite at the apple. So that's just it. But you just make your targets on certain good names, run your valuation models, know what makes up their value, make sure they have a moat, make sure there's no inherent risk in the actual platform, and go in hard when you see it. Like if I saw Tesla at 600, I'd refinance the house and everything to get in there. So that's just the way you do it. And that's the way you get the most payoff as well. And I'm still kicking myself that, the hedge there was no hedge. I had hedge against all my equity positions, but not my Bitcoin position. I had a feeling, and everybody is guilty of this. We had a feeling once we shot straight up, like whatever it was 2 months ago, and hit an all-time high, we thought, oh, this could be it. This could be the run we were looking for. This could be the blow off top that everybody's been talking about for 4 years. But no, didn't happen. We were all tricked. We were all fooled. That's why it's important to be paranoid and understand the head fake and take it from there. Let me see. Crypto Creed, are you still bullish on Solana? Yes. I consolidate most of alts into Solana, and when I see the prices falling, I am kind of depressed, but not sold. So again, every week we reanalyze the thesis of Solana versus every other chain, bar none. So if you look at my positions, I've got big Ethereum bag, quarter of that's about Solana. Then I've got a next biggest position is now Luna, and I have a position after that, it's Phantom. So Phantom's a hedge on Solana in case Solana doesn't make it. Phantom is the next likely choice, and Luna is kind of a layer 1 / stablecoin play, slightly different hybrid, but it's also a very good safe place to park. So I still do believe of all the chains, no matter what metric you look at, we look at over 20, Solana is still the strongest, and they have their problems, but people talk about congestion. Solana's congested. It's like everything is congested. I think it was another, I don't want to mention the name, another one just got congested today, right? I got confused between two. I don't want to mention it. But that's on top of Matic getting congested, Ethereum being congested, Cardano being congested. They're a victim of their own success. So much is being built, so much is used, and they're finding these little problems that are easy to solve. And, Anatoly and the team are working really hard in doing that. So once they do, and I believe a layer 1 needs to do 1 million TPS to be able to run things like stock exchanges and stuff. Once we get there, it's off to the races. We know it already craps out at 400,000 TPS, theoretically. So they're building towards that too. So I am still very bullish. It is a very weak time. Sometimes the world of crap just falls down on a token. Bad news cycle after news cycle after news cycle. And it worries people. But I remain optimistic, and I'm buying as well. I've been layering harder and harder in thirds all the way down. So although I haven't bought since, I don't know, 93 or whatever. I don't even know what the price is now. But I just think long term for the future. And even if Solana is not the number one chain in the unlikely event 3 to 5 years from now, it'll be right up there. So that's my thought. And there will be, we do have a multi-chain future ahead of us. But the development and the execution, again, sorry to go so long on Solana, nothing compares to it so far. Nothing. When you look at all of those factors together. So, Postarante James, I'd like to learn about hedging positions, as you said in earlier casts. Any way you could conduct a tutorial on how to do that? The danger is what I learned in 2021, and I have all these questions all the time. The simple analogy is I would be putting people in the seats of fighter jets, and it's very easy to make a mistake. And firsthand last year, I saw people following me into trades, but they made mistakes. Like when I was selling a call, they were buying it. I was going short, they were going long. These little things, I discovered that it takes a huge amount of discipline. What I tried to do is build safety rails to make a model that would make option trading foolproof, hedging foolproof, but it's just, there's so many variables in picking strikes and positions, going long, going short, position sizing, etc. And people screw up all the time. So for me, it's second nature, but for others, I need to find a better way to teach. So we are still working on something, but we need to make it foolproof. So stay tuned for that. And fingers crossed, we have a new full-time employee coming on board real soon. And we're going to work on that together. So no promises, of course. The last thing I want to do is have people lose money because they make a mistake and they follow me into the burning building and the building falls down on them. And that's what I don't want to happen. So big thank you, everybody. And thank you for your donations as well. St. Jude Needs Us, Bill, A Bottle of Red, Chiku, Capono, Bill Ennis, German Girl, Virginia, GT350, Mako, HMFLC, and Milan Patel. Thank you so much, everybody. I think that's a wrap. Oh, Breakbeat Stew, Sleepless, Tuesday's Dragon of Fire, Mrs. Reed, Nudie Branch, that sounds fun, and Tony M, Duke, Dog1, and a big thank you to the mods in the chat today, Big Apple and Caligula. You guys rock, and K8 for managing all the questions and making sure we address everything. So we listen to everything that you guys say, and we're here for you. So hang tight, everybody. Let's see what happens. Might be a little more choppy action through Wednesday at 2 p.m. Eastern time. That's when the meeting will come out. I will do a live broadcast like 5 or 10 minutes after that meeting and tell you what I see. But fingers crossed, Jerome Powell doesn't rock the boat. A lot of it's priced in already, but we don't know how much. So good night, everybody. Be safe.